And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Hey, thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It's Thursday, January 22nd, 2026. We are here in New York City where it is going to get cold. I left Florida, and I hear tomorrow we're going to be like 8. 8. Not 18. 8. And I think they then say, well, it feels like -5. The things I do. I left Florida, it was like 75. Okie doke. Anyway, hope you're having a good day. In case you don't know, this is serious talk on everything that affects you. We'll do the markets, the economy, your jobs, your industry, the Morlocks in D.C. And boy, there's a lot of Morlocking going on. And if you want to know what Morlocks is, just look it up. We'll post this show at GaryK.com, also on our X feed. And if you follow us on X, you should. If you'd like to email me, just be nice. Oh, and by the way, we'll post it on the BizTV YouTube channel. Oh, and by the way, any day now, we will have our own YouTube channel and studio setting up. You'll be able to see my mug. Ladies and gentlemen, we do this every now and then. We blast ourselves. Yes, this is the lessons show, or at least part. The mea culpa show. Because there's something that happened, something that occurred, something that we said to you on this radio show, and we were 100% right. 1,000% right. But you know what Stanley Druckenmiller says, learned from George Soros? You can be right all you want, but if you don't have huge positions, doesn't matter. If you don't stick with it, don't matter. It ends up being on the minor side. So lesson time. Mea culpa time, and we made money on this, and we're still gonna mea culpa. Because I have to tell you, coming under the heading of you never know, but follow the roadmap, and more than likely will not lead you astray. How do we know that? Because we have thumbed our way through tens of thousands of charts of bull and bear markets. And you know what happens? We get in our own way. I got in my own way, and we're talking about something we made cheese on. That's how tough we are on ourselves. Ladies and gentlemen, we'll do the market, today's market, on the back end today. Oh, wait. After we finished the early radio show yesterday, the president did his taco and blew off the tariffs that he threatened to put on all of Europe. And I need you to know what I'm going to do short shrift. There's no deal. There's no nothing. Everything that is being told to you by this administration now on what's going on with Greenland has already been going on. There's no taking over Greenland. There's no running over Greenland. We've always had the ability to add military in Greenland. That's what we're going to do. For me, the jury's still out. It was a matter of the market dropped 850 points and they crapped in their pants again. They didn't want another 10% drop like they had in April. You don't believe me? That's okay. We still love you. Hopefully you still love us. Back. Oh, one more thing. Go search on Google right now if there are any trade deals with China, India, and Europe. China and Europe 1-2 behind us in size. India's pretty big. We did a definitive trade deal with Saudi Arabia, very small. We have a quasi-trade deal with Japan. We never got one with China, Europe, or India. Another framework. It's now a joke, but I digress. The good news is, maybe, we'll see, maybe he's done with tariffs. I don't know. Anyway, lessons. So do you recall, it was the month of March 2024. You see, in that month, gold broke out of, we'll call it from August of 20 to March of 24, range bound. Except you really can go back to 2011. The GLD, representing gold prices, hit 185 and backed off and did a big saucer for about 10 years. Got back up around 185, actually hit a high of 194, but closed that month at 184. Got up to 193 in 22, but closed that month at 180. Closed the May month of 23 at 182. We're talking 13-year range with a higher low. And you know, we came on this show and told you that in March of 24, and particularly March 1st and 2nd, gold had a major 13-year breakout. And usually, decade or more breakouts are going to be really meaningful. We said that to you. We bought. We also bought about a month later because it went up for a few straight days, made a right turn, put in a flag, and we bought on that flag. Handled it beautifully. Beautifully. Since then, gold is up, let's call it 190 to 450. From March of 24. What is that? 2 years almost? 22 months. Only one problem. In June of 24, gold broke the 50-day and we sold offensively, even though we were very well up, and it held just underneath. And then we bought the breakout again, but at higher prices in August of 24. And we made some hay. But we also traded that too. It broke the 50-day in November of 24 and we got worried. Even though we had lots of cushion and we didn't give it a chance. Into 25, it put in a new range between 236 and let's call it 257. And then broke out in late January of 25 at about 258. I don't think I bought that breakout. That 258 took you up to 290. And that had a nasty pullback but held the 50-day. And then rallied up without us. To the best of my recollection, to 318. That was in May, end of April, 25. here's where it gets interesting. For the next 12 weeks, gold pretty much held in a range. Little drops below the 50-day, but always held. Up next, September of 25 on gold. This is the one and only Investor's Edge. So, I want you to notice gold went from a big breakout of 190 and in August of 25 was trading between, let's call it 300 to 318 with one pullback underneath, but never really break below the 50. We bought it on the breakout, and we bought it beautifully. Beautifully. And we rode it up. Beautifully. But you know what we did? We didn't have big position. And we watched it go from 317 up to 403. What a move. In a matter of 7 weeks. And then the harsh pullback. We sold. Very satisfied with that move. But you know what happened next? You had a good 15% pullback. But the reason for the 15% pullback was because it got so extended. You know what it didn't do? It never broke the 50-day moving average. So guess what we did? After the pullback on the first move up, we bought. You know what happened days later? It gapped down. We sold. Minor league. I think we lost 1% or 2%. You know what we didn't do? We watched it stay above the 50-day, build a couple of stair steps, and weeks later, mid-December, break out above that 403 level. You know why we were happy about that? Because it went to 418, and on 12/29, it dropped on a gap from 418 to 395, and I'm thinking, whew, good sell. But never broke the 50-day. Guess what happens next? Oh, it breaks out again, and it's 452 today. So that breakout at 318 is now 452. Almost 50% since early September. We did not make 50% because traded. And it never broke the 50-day moving average, the thing we talk about all the time. I was worried that it got so extended and you dropped from 400 to 360 in 5 days. It's a big drop. But we didn't. We got back in and stopped out and did not get back in again. But what's the bigger moral of the story? One of the widest, biggest, gargantuan breakouts in gold miners that occurred in March of 24. I did not listen to myself and what I said. That more than likely, a 13-year breakout has got to be meaningful. A 13-year. On top of that, the gold miners in August of 25 broke out before the metal. And what do we tell you? When the miners are outperforming the metal, it's usually bullish. So we were happy. We bought. Didn't hold. So as we always do, everything I'm telling you right now, we're going to be writing down in our notes. We made money on it. We mishandled it. It's not good enough to see a monstrous move. By the way, the big breakout in gold miners was up. It was $67. The old high was September 2011. It broke that just in September and has gone from 67 to 105. Big bull market in gold and gold miners. And of course, silver going along for the ride. Silver did not break out of all-time highs of 11, but I will tell you on 6/30 that month, this June, it broke out at $34. Not the all-time, but good enough. It's 87. Just since June. And you had the template. You had the template. We didn't play the silver. So this will go down in our archives. And when we see major breakouts, years, you know what's looking like it right now? The Emerging Markets Exchange Traded Fund, the EEM. Go look at a monthly chart going back to 07. Doesn't mean it works. May not break out. It's right there. Emerging markets have lagged big time. It's right there. So today was a little post-mortem, a little bit of lesson time. I'm not demoralized. We made money. And I'm never demoralized when I am constantly learning about the things I have done right and wrong in the markets. But this one goes to the head of my class on me. Remember, we don't take on anybody in our industry. We don't put anybody down. We only compliment. We stopped that ages ago. Remember? We used to blast that certain guy that's on a certain network until I got an email from a very nice man and said, it doesn't show up right, Gary, if you're putting down somebody else. And I thought about it and I listened back to myself and I said, he's right. Tough enough business. So we just critique ourselves. Up next, more on this, the market. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. And in case you don't know, we have these day minders, the big ones, that we write in on the things we see and the things we do. When we do right, we write it in. When we do wrong, we throw F-bombs at ourselves. Why? If you are not introspective on your life, how do you fix things? How do you enhance the good stuff? Anyway, just letting you know. Today, Dow was up 300. S&P was up 500. Then it was up 180, back to 300. S&P up 37, NASDAQ 211, NASDAQ 100, 191. I will tell you there was some selling today in semiconductors and some AI and stuff, but not a biggie. I noticed SanDisk was down $38 early. It actually finished up today. What can I tell you? A few things of note. Bitcoin still no oomph. Still no good. Stay away. And I noticed amazingly, I gotta tell you, I don't know. Let me be careful here. We're not naming names. We're interviewing somebody who called for 150,000 Bitcoin 2 months ago at the end of the year, and then said end of January. That just pisses me off. Just letting you know. It's still in a bear phase. What else? Small caps. Mid caps rested a little bit, was up better, came back. No worries. Gold and silver. You think they're going to pull back? Up again today. Open kind of nothing and just rallied. Being extended don't matter. Boom. I've already gotten a bunch of emails. What's going on with this? Let me explain. Before Tuesday, when Trump put out his BS tariffs, and we might as well just call them BS tariffs, market got hit for 850. NASDAQ 550. You know where we stand now? For the week. Is it possible the Dow's up 259 points? Can't be. No, that's not the week. My bad. Dow's up 24 points on the week. After being down 850. The S&P 500 is down 26 points, 0.38%. The NASDAQ, still down 0.34%. But the Russell is up 1.5%. And the mid-cap's up, 0.43%. And the Russell is up, 1.5%. My bad. So Tuesday is just about a memory. And I'm trying to get, we know the modus operandi now. He's full of crap on the tariffs. But we don't know how long he's going to stay full of crap on the tariffs. That's the problem. Would have the market kept going lower if he still kept the tariffs on and did not take them off yesterday? These are questions we're asking ourselves, but we really have no answer because it's unknown. Anyway, we thought the market before Tuesday wanted to go higher. Now that the tariffs are gone, good couple of days. Overbought near term, little froth, bunch of complacency. Maybe we pull back a little bit here. Don't know. But technical condition, pretty darn good. Advance declines, pretty darn good. New highs, pretty darn good. Last was first today. What have we been complaining about? The lag 7. It's 8, but Google's been strong. Tesla was up 19 today on no news. And back above the 50-day. I had to move that on my screen. It goes to the maybe. Even dead Oracle up 4. Meta up 34 and an upgrade today. Still way down. Microsoft up 7. That's been trashed recently. Salesforce.com up 6. Amazon up 3. Apple can't get going though, and Broadcom was down. Netflix was also down again, amazingly so. Dead money on that stock. But as I look at my screens, gold, silver. Mixed day for the financials, but some still finished up. They were mostly strong early, so they pulled back a little bit. I can see they brought in housing. Retail got hit to a certain extent. Not a biggie. And in the Dow, strength, American Express bounces. That's that weakness recently on the 10% credit card thing. By the way, you know what a couple of credit card companies announced? Well, we're not changing our credit cards. Maybe we'll add a couple of 10% credit cards. Not a bad idea. Not a bad idea. Mentioned Microsoft. That was up. Travelers bounce up 5. United Health up 6. They have been weaker. I mentioned Salesforce. Anyway, and really not much down. Sherwin-Williams was down. Home Depot down. IBM down. And as we said to you, the housing related didn't have a great day. But not much else to say. The big indices remain just range. Just so you know, the S&P this second is sitting right where it was. October. 3 months. No gain. NASDAQ. 3 months. And you can actually go back, 3 months. No gain. Little back above the 50. And by the way, a lower high. And by the way, we think had everything to do with the very weak lag 7. But as I'm looking to my left again, that frickin' gold silver. And as we started the show, lesson time. Lesson time. I don't care what age, keep learning. Muy importante. Never stop learning. Never stop moving foot forward. Lessons. Bond market flat today. As we said, Bitcoin, ain't nothing happening there. And there's a little bit of a story. I talked Trump. I got to talk the communist state of California. I have friends that live in California. I had to bring this up. Population's huge. The GDP of California, I believe, is like bigger than a lot of countries. And what I've been saying for a long time is I'm amazed the voters continue to vote the same people that have no respect for them. Never understood that. The New York City new mayor wants to raise taxes to the highs. Who's the highest? Closest New Jersey, so he wants them there. Complete disrespect for the taxpayer, who will move. California wants to do a wealth tax of 5% if you're a billionaire. How dare you become a billionaire? We're going to take 5%. By the way, I think that's yearly. Not one time. And remember, when they start something, it never ends. Gavin Newsom will be the front runner come 28 because the world is insane. The abuse of the taxpayer there is beyond the beyond. The disrespect and the using of the people and businesses there. It should take a nothing to run that place if you just leave it alone. But no. Up next, some tidbits about it. This is the one only Investor's Edge. So we bring up California because I got friends there and they're always telling me things. I've always have been weirded out. How do I pay $3 for gas in Florida, but if I go to California, I see signs for $6? How is that possible? Well, here you go. Drivers in California pay approximately 90 cents to $1.30 in combined state, local, and federal taxes, fees, and environmental program costs. That's for starters. They also have a cap and trade program and a low carbon fuel standard, whatever the hell that means, 54 cents a gallon in compliance costs. They also have a fuel formula, a special cleaner burning blend of gasoline known as carb gasoline, which is mandated. This is more expensive to produce, and specialized refining, with few refineries outside the state able to produce. Declining refining capacity. The number of refineries in California has decreased from over 40 in the 80s to 11. There's planned closures of additional refineries, such as the Phillips 66 in LA, which reduces further capacity. And are you ready for this? A mystery surcharge. Believe it or not, Californians call this a mystery surcharge, but they never yell and scream and curse about it. It is averaged 30 to 40 cents a gallon, and they cannot directly explain by taxes or environmental regulations. Somebody writes, this suggests that other factors such as higher operational costs, limited competition among retail stations, and higher profit margins. I don't even know what to say. They hate their citizens. They really do. And then I sit here and I go search California state income taxes, 12.3%. High end. Plus, you ready? A 1% mental health surcharge for income over. What the hell is that? So, 13.3% plus 37% federally, you are working into the month of July. If you live in California, and God forbid you are a success story based on your earnings. Stunning. Stunning. And then, of course, the gas tax. Oh, that's right. What about the other fees? Go search the other California. It is an encyclopedia fees and a list of government entities in California that you can put in an encyclopedia. They have created so many oversight businesses that the taxpayer pays for, with a ton of overreach and a ton of overlap. This guy is going to be the number one running for presidency. Now, you know I'm no fan of this guy. He's no conservative. He's a neocon. He complained about neocons for how long? But man, oh man. California, with the highest taxes in the country, running massive deficits. Florida with no state tax, surplus. One would think they would get it, but no. And the reason is they keep being voted in. I can promise you, if these high taxers hear from the citizenry, we're not paying this crap anymore and we ain't voting for you, there would be a move afoot. I just had to bring this up because I saw the sign. Somebody posted it, $6 in California. I just paid $3.10 in Florida. By the way, for the middle gas, not for the lower gas. It really does matter what state you do live in as far as wealth. And by the way, the cost of living in California is obscene. Oh, and by the way, a lot of celebrities are leaving. Oh, by the way, a lot of businesses are leaving. But I got to tell you, a ton are still there, a ton of people still there because it's a magnificent state. You ever visit it? It's beautiful. But if they keep disrespecting, I got to believe there's going to be a lot bigger migration going forward. We're watching New York City very closely with this guy in. We'll keep you apprised. And by the way, in Florida, they just keep putting up more buildings, more hospitals, more schools, more stores, you name it, because more people. Hey, that all said, you have a great evening. Drive carefully. When you get home, do like we do, quite simple. Make sure you hug your family. Make sure you hug your children. They will feel better. You'll feel better. I promise. Stay well, be well. Always appreciate your time. Until tomorrow. Hey, stay warm out there. Good night.